Leaked NIO stock result. What NIO stock will be worth in 2025. NIO stock recently hit a new 52-week low, falling below $30 for the first time in more than a year. So why is NIO stock plummeting, falling by 30% in the last month alone? No, it's not that NIO is underperforming. Hey folks, welcome back to Stock Market News, where in today's video, we are going to find out the NIO stock price for 2025. But before we begin, make sure you subscribe to our channel and click the bell icon so you don't miss out on any of our amazing videos. And let's begin! On the contrary, the company recently had a record-breaking delivery month in November. Shares remain under pressure as a result of the ongoing concern about China, delistings, and other transitory factors that do not directly correlate to NIO's performance as a company. Nonetheless, the stock is now oversold, and the technical picture should improve from here on out. As shares have recently hit $30 support, we believe the long-term double bottom pattern is developing. Furthermore, the RSI fell below 30, while the CCI registered a minus 300 reading, which was consistent with another highly oversold point earlier in the year. The full stochastic is beginning to rise, and we should see the stock return to more bullish technical momentum soon. How to handle the China-induced drop? Most Chinese stocks have been hammered recently, and NIO is no exception. Looking deeper, we see that NIO should not be affected by the meltdown in specific Chinese equities, and NIO's recent sell-off may be a temporary phenomenon. In general, Chinese stocks are in a state of flux right now. Nobody knows what the Chinese Communist Party, or CCP, will do next. Will the CCP impose stricter regulations? Will Alibaba be nationalized by the Chinese government? Will the party forbid Chinese companies from listing abroad, specifically in the United States? But for the time being, the most pressing question appears to be whether NIO and other Chinese companies will be delisted from U.S. stock exchanges. There are several serious questions here, and the recent uncertainty has harmed trust in NIO and the company's share price. So let's go a little deeper to see if we can answer some of these burning questions for NIO investors. The CCP has been flexing its muscles, and it's clear that the party is all-powerful and effectively controls everything in China. Nonetheless, it is not in the party's best interest to harm its economy and set back economic progress by 20 or 30 years. Did you know that Chinese stock losses, listed in the United States, have surpassed $1 trillion this year? This negative dynamic is not conducive to the Chinese government's desire for economic progress. I've heard it said that the CCP is unconcerned about stock prices. They only want power. The Chinese government is concerned about stock prices. The Chinese economy is now relatively advanced, and the Chinese stock market is an important part of the country's social structure. Without a stable stock market, the CCP may face civil unrest, social disorder, and other tragic outcomes, weakening the party's position and reducing its power and influence over its citizens. Indeed, Chinese regulators recently issued a statement assuaging delisting fears. According to China Securities Regulator, where Chinese companies list their shares and raising funds, is important. Furthermore, the regulatory agency stated that reports calling for regulators to pressure VIEs to drop their U.S. listings are a complete misinterpretation and misrepresentation of the agency's regulations. NIO has no incentive to delist from the United States, and the likelihood of a NIO delisting occurring is remarkably low. NIO, a high-end EV. Let's talk about the company now that we've discussed why NIO is unlikely to give up its U.S. listing. NIO is a genuine premium EV manufacturer, which is often overlooked. This phenomenon distinguishes NIO from other Chinese EV manufacturers like XPeng, Li Auto, and BYD. In the previous NIO analysis, they determined that the average vehicle selling price in a NIO is around $65,000. As a result, NIO competes primarily with premium EV automakers such as Tesla and Lucid. What distinguishes NIO from its American counterparts is that it is a Chinese company that is currently focused on increasing its market share in China's domestic market. Furthermore, NIO has the Chinese government support and backing. During the peak of the pandemic, NIO was still a struggling EV startup whose problems were solved by a $1.4 billion Chinese government investment. There's a lot riding on NIO's success in China, and the company is ramping up its efforts. NIO set a new monthly delivery record in November, and last month the company delivered 10,878 vehicles, a 106% increase year-on-year. NIO sold 80,940 vehicles in the first 11 months of the year, a 120% increase year-on-year, at around $65,000 per vehicle, and with another 10,000 vehicles expected per month, NIO should generate close to $6 billion in revenue this year. Now let's have a look at NIO's revenues. We see that NIO's revenues are continuing to grow at a rapid pace following the COVID-19 slowdown, and we expect to see significant growth in the future. The company will deliver slightly less than 100,000 units this year, but it is planning much larger production in the future. It's important to note that for NIO, demand is not an issue, and there should be no shortage of demand for high-quality premium EVs in China in the coming years. With the launch of its flagship ET7 sedan in Q1 2022, NIO expects to achieve an annual production capacity of 150,000 vehicles on a single shift and 300,000 on a double shift. In addition, 300,000 units of capacity will be added by the company's second plant, which is set to open the second half of 2022. As a result, by the end of 2022, NIO may be able to produce 600,000 vehicles per year. Naturally, it will not be a straight line from 100,000 to 600,000, but the company's production capacity in future years will rise. According to analyst projections, revenue in 2022 is expected to be $9.74 billion. Applying the 65,000 ASP figure to 154,000 vehicles yields $10 billion in revenue, which is slightly higher than the consensus analyst forecast for 2022. However, after 2022, consensus estimates appear to underestimate NIO's growth potential. NIO revenue projections. According to analyst consensus, revenues will be around $16.64 billion in 2025, rising to around $30 billion in 2026. This is presumably when some analysts expect NIO's second plant revenues to begin. However, NIO's second plant production will most likely be reflected in the company's revenues much sooner, as the NIO Park facility is expected to begin production in Q3 2022. As a result, NIO's revenue growth is likely to be much higher than anticipated. If NIO can achieve twin double-shift production at both of its plants within the next few years, it will be able to generate enormous revenues of around $32 billion by 2025. Furthermore, if demand of NIO's vehicles remains strong, the company may have plans to build a third plant by this time, from 2025 to 2027. Furthermore, NIO will most likely expand its operations to other EV markets in the coming years. Now, you may be wondering why the price-to-sales multiple is expected to rise in the coming years. Because of the current China uncertainty, NIO's price-to-sales multiple has been reduced to absurdly low levels. Tesla, for example, is likely NIO's closest competitor, and the company's current FWD-PS ratio is around 15. If NIO was trading at 15 times FWD-PS, its stock would be worth around $100 right now. As a result, I don't think it's unreasonable to expect NIO's PS multiple to expand moderately from here once the China uncertainty subsides. Even at the pinnacle of my projections, I'm only factoring in PS multiple halves that of Tesla. If you thought Tesla's PS multiple was high, wait until you see Lucid's 36 times forward sales valuation. Even China's Xpeng is trading at 7.2 times forward sales, and many slower growing companies in the United States are trading at much higher multiples than NIO. As a result, NIO is currently very cheap, its multiple is likely to expand, and its stock price should rise significantly in the coming years. Furthermore, given NIO's strong growth prospects and significant profit potential, the company's stock price could rise to around $200 by the end of 2025. And that brings us to the end of this video. Feel free to let us know what you think down below. And if you like the video, please leave a like and subscribe to our channel for more great ones. Thanks for watching, and we'll see you in the next one.